Right now, while everyone is busy chasing AI stocks and arguing about Bitcoin, something quietly massive is building in the background, and almost nobody is paying attention to it. I'm talking about silver, not the silver your grandmother kept in a drawer. I'm talking about a macro setup that comes together maybe once or twice in a decade. And if you understand what's actually happening in the global economy right now, what I'm about to show you will completely change the way you're looking at your money in 2026. Stay with me for the next few minutes, because what's coming is not a prediction, it's a setup, and there's a very big difference between the two. Before I get into it, if you're new here, hit that subscribe button right now. I cover macro finance, real asset strategy, and the kind of big picture thinking that the mainstream financial media either ignores or gets to about 6 months too late. Hit subscribe and you won't miss what's coming next in this series. Let's start where everything in macro finance starts. The US dollar index, most people call it the DXY, is the single most important variable in global finance. Everything is priced relative to it. Commodities, emerging markets, gold, silver. And here's what most people don't know. The dollar moves in long, slow cycles. We're talking 7 to 10 years of strength, followed by 7 to 10 years of weakness. It's not a perfect pattern, but it's consistent enough that serious money managers track it like clockwork. The dollar peaked in 2022. That was the most aggressive Fed hiking cycle in 4 decades, and it pushed the DXY to levels we hadn't seen since 2001. That was the top. And since that peak, the dollar has already quietly lost around 14% of its value against the global basket of currencies. That's not noise, that's a trend. And here's why that matters for silver specifically. Over the last 20 years, the correlation between silver and the dollar index is negative 0.82. That means when the dollar goes down, silver almost always goes up, not sometimes, almost always. The primary macro headwind that has been capping silver's price for the last 3 years is slowly, steadily being removed. But the dollar is just the first piece, because what's driving the dollar lower is something even more important. Rates, interest rates. The Federal Reserve hiked rates from near zero all the way to 5.25% between 2022 and 2023. That was the most aggressive tightening since Paul Volcker in the early 1980s. And it did its job. Inflation came down, the dollar surged, and silver got crushed in real terms. But that cycle is over. The Fed has already started cutting, and the market is pricing in more cuts through 2025 and into 2026. Now, why does that matter for silver? 2 reasons. First, real yields. When you subtract inflation from nominal interest rates, you get real yields. And real yields have been falling. Silver is a non-yielding asset. It doesn't pay you interest. So the opportunity cost of holding silver, the return you give up by owning it, instead of something else, is shrinking every time the Fed cuts. The math is simple. Lower real yields equal higher silver. It happened in 2008. It happened in 2016. It happened again in 2020, when silver more than doubled in less than 6 months as real rates went negative. The pattern is clear. Every major Fed easing cycle since 1975 has been followed by significant silver outperformance, typically within 12 to 18 months of the first cut. We got our first cut in 2024. You can do the math on the timeline yourself. That's 2 dominoes. Dollar falling, rates falling. But here's the third one, and this is the one almost nobody is talking about. Positioning. Who owns silver right now, and how much do they own? The gold to silver ratio is currently sitting around 80 to 1. That means 1 ounce of gold buys you about 80 ounces of silver. Historically, that ratio has averaged closer to 50 to 1. Sometimes it goes even lower. What that means in plain English is this. Silver is historically cheap relative to gold right now. If that ratio just normalizes back to 50 to 1 and gold stays exactly where it is today, silver would need to move up roughly 60% just to close that gap. That's ratio compression alone, before you account for any other catalyst, and then look at speculative positioning in the silver futures market. COMEX Silver, the main U.S. futures exchange, is showing managed money longs near multi-year lows. Professional traders are not positioned for a silver rally. The crowd is not in this trade. And that matters, because when the next macro trigger hits, the repricing doesn't happen slowly. It happens fast, because there's nobody already in the trade to sell to. The move catches people off guard, and that's before you even touch the industrial demand story. Here's something that separates silver from gold that most people genuinely don't understand. More than half of global silver demand, over 50%, comes from industrial use, solar panels, electric vehicles, semiconductors. Silver is the single best conductor of electricity on Earth. Supply base that can't keep up, while macro conditions are shifting in silver's favor at the same time. That combination, industrial tailwind plus macro setup plus positioning extreme, doesn't come together often. When it does, it tends to produce the kind of moves that people talk about for years. Now let me be clear about something. I am not telling you silver is going to the moon tomorrow. I'm not giving you a price target. I'm not your financial advisor. What I'm telling you is that the setup, the confluence macro forces men usually strong right now. Dollar at an inflection point. Rates in a declining cycle. Gold to silver ratio at historical extremes. Institutional positioning near multi-year lows. Supply deficits widening. Industrial demand accelerating. All of this is happening at the same time. That's rare. And the people who understand a setup before it becomes obvious, before CNBC is running silver segments every week and your coworker is asking you about at the water cooler. Those are the people who tend to benefit the most from it. That's what this series is about. Understanding the setup before the crowd. If this kind of analysis is useful to you, do me one favor. Share this video with one person who you think needs to see it. Not for the views. Because if someone in your life is managing money or thinking about where to put it in 2026, this macro picture matters. Drop a comment below and tell me, are you already watching silver, or is this the first time you're really thinking about it? I read every comment in the first hour, and if you want the next part of this series, where I'm going to go deep on how to actually think about positioning in silver, the different vehicles, the risks, what most retail investors get wrong, make sure you're subscribed so you don't miss it. The setup is in place. The only question is whether you understand it before the crowd does.